Welcome to Trading Nation. I'm Eric Chemi. It's shaping up to be a painful week for the healthcare space. The XLV Healthcare ETF and the IBB Biotech ETF both falling more than 1%. Matt Maley's here from Miller Tabak, and Phil Streible's here with RJO Futures. Phil, let's start with you. What are your thoughts on these moves downward?
You know, healthcare is really interesting because when we finally saw healthcare break just over the last couple days here, the Dow Jones was extremely susceptible to it. At one point, we had fallen over 400 points as a result of that. So it's really interesting, and it's a market that a lot of people don't watch. So you want to definitely throw that on your trading screen here. Now, if you're going to play it here and you want to get back in buying the dip of the healthcare, you may go into healthcare, but also buy puts on the Dow Jones or one of the broader indexes, because we could see how susceptible they tend to throw the baby out with the bathwater. Healthcare may have priced in that decline, while the rest of the broad indexes may continue to fall.
Matt, let's turn to you. What do you think about this?
Well, one of the things we got to think about is that, first of all, it had, this huge rally in January. It was up almost 10%, before this week anyway. It was up 10%. So it was well ahead of the market for the first time in a while. And, so it was susceptible to a pullback. The thing is, we had a couple of news items out with, this healthcare insurance program that, Amazon and JP Morgan were talking about. And we also had President Trump talk more about concerns about pricing in that area. The problem is, once we get past the State of the Union address, I think that could die down again. The thing about it is a lot of people are worried about what happened in 2015 when healthcare and especially the biotech stocks crashed. I mean, the biotech index fell 40% over 6 months. The thing is, the setup is a lot different than it was back then. Those groups had rallied much more strongly than the S&P in the previous 3 or 4 years. I mean, just in the last 12 months up until that top in 2015, the IBB was up 84% versus up a 15% rise in the S&P. So the group was very overowned and very overleveraged. So when Hillary Clinton came out and made comments about drug pricing, the group crashed. Not because the fundamentals had changed dramatically, and they didn't change over the next few months. What did change was the perception, and that when this thing was so highly leveraged, all that leverage had to be unwound. Now the group has settled down a bit and is trading much more on fundamentals. It has rallied in the last year. It's rallied the same amount as the S&P. So it's not over leveraged and not over owned. So even when we get these hiccups, I don't think you're going to see the big sell-off that we had a couple of years ago. So don't worry about that. That doesn't mean the group can't go down, especially if the market corrects. But we just don't have that same kind of problems we saw. In other words, we've got to look beyond the fundamentals a little bit on this one to see what's really going to happen next.
Phil, let me turn back to you. We saw a chart just pop up. It shows the IBB going back to the 2015, like Matt mentioned, and you see that we haven't even gotten back to those highs yet from that time frame. Does that give you pause in the way that you just think about maybe that's resistance, that you won't be able to break through those highs, as opposed to the rest of the market that's broken through past highs and it continues on to have that momentum? I want to get your thoughts on how do you think this trade compares to what happened 3 years ago?
Well, I think that the market, I think it's going to take another turn up. We'll probably see another positive jobs data come out tomorrow. We'll start to see investor confidence come back in. Remember, the global market is growing so strongly right now, and healthcare is such an important topic. I believe that the momentum will turn up here. Watch the ADX on it. It measures the relative strength on the market and the strength of the trend. And that started to break just a bit, but as that market turns back up, I think we'll see the push to the upside. I am very cautious, though. Remember, markets tend to fall twice as fast as they rise, so have that protection in place going forward.
Is there a particular strike price or a date, if you were to get some puts, that comes to mind to you?
Yeah, I really like, Tuesday's low. I think that that's a key level there. And, I don't think that we'll see much of a break through that. I really think that we're starting to consolidate. We're seeing that across all the other broad markets as well. So, if we take that out, then maybe it could be questionable, but I like that low.
Okay, Matt, Phil, thanks for coming on Trading Nation. Really appreciate the insights there. We're going to see what happens. To everybody else, thanks for watching. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.